What's up, guys and girls? Hope you're having a good day so far. Wanted to take some time today on a Wednesday, which normally we don't do, to talk about market structure, talk about smart money zones. We went over them a little bit on Sunday's stream, and give some time for anybody who is new to the community or new to the strategy or have any questions about the strategy, indicators, etc., to do that. We're going to see how today goes. I pushed it to 7 p.m. instead of a normal 5 p.m. I don't know if that's going to be better or worse for some people. You guys can give me your input. I know that a lot of the community, like 35-40%, are outside of the United States. So this might not be good for those because it might be super late already at night. But I figured for a lot of people who are in the United States, this might be a good time on a weekday because you're getting out of work and actually able to be around. So as we go through, we're going to be using this SOP that I wrote up today. It's a Notion document. I will put it in the chat section of the YouTube. We're going to basically use this kind of as a framework, so this way I don't go too sideways, which tends to happen. But if you guys have questions while we're going through this, please ask them. That's the benefit of doing a live stream versus me just making a video. If you guys have real-time input, real-time feedback, real-time questions, I can answer those as we go along. For anybody who wants to comment, if you are having trouble commenting or chatting, you might have to be subscribed to the YouTube channel. I think that I have that set up so that like scammers and stuff don't happen, but I never publicly live stream anyway. But if you're having trouble typing, that might be it. And we will get into it. Let's see who's here. Amar, what's up? Stefane, Claire, hope you guys are doing well. What's up, D? And as I said, if you guys have questions, just go ahead and throw them out as we get through this. Now, the indicators that we're going to be using today are basically the bread and butter that we use each and every single day, each and every single week. We're going to be using a BX trender with the settings 5, 20, 5, 25, and we're going to be using the market bias with the period 20, smoothing 8, oscillator period 8. Alex is saying he cannot hear. Can anybody else not hear? Is anyone else having any problems? Clutch is saying hello. Can you guys not hear me? It says everything's working. I hope that I didn't just full send the first 2 minutes. I can hear you just fine. All good. I can hear. Okay, so if you can't hear, try refreshing. Okay, awesome. Thank you. I was gonna say, man, that would be funny if I have to redo that beginning, but it's okay. Try refreshing. That should be it. Maybe also your YouTube might also be muted. But it looks like everything's working on my end, and if you guys can hear me, then it's probably something on their end. Okay, cool. All right, so like we said, indicators we're going to be using today is going to be the market bias. The settings is going to be 28.8, and the BX trender we're going to be using, those settings are 5, 20, 5, 25. If you have any questions as we go through, go ahead and ask away. The market structure SOP is above, like we said, in the chat if anyone's hopping in now. So if you want to get access to this, go ahead and click on that. And then if you want to rewatch this live stream later, I will be posting it inside of this standard operating procedure. So the 3 things we're going to talk about today: market structure, Fibonacci's, and smart money zones. So the goal of this is to teach you guys how to understand and apply market structure, which I think is single-handedly one of the most important things when it comes to trading. Fibonacci retracements, smart money zones, and using confirmation tools like the BX trender. Market structure is, like we said, probably the most important thing in the market. What you will notice with any indicator that you use, it doesn't matter what it is, whether it's an oscillator, whether it's an SMA, whether it's a band, whatever it is, every single indicator is going to be lagging. Now, the reason it is a lagging indicator, and all indicators are, is because we need the candles to close in order for that signal to present itself. Now, market structure is also going to be that way because we have to wait for candles to close in order to get confirmation, but it's the closest thing to real-time movement that we can possibly get, and that's normally going to be called price action. So price action is basically just a fancy way to say how are the candles moving. And structure is going to be the structure of that price action. So market structure is the founding principle of all price movement or price action. If you hear me say price action, it's basically just price movement. Every price chart, no matter the time frame, forms a pattern of highs and lows that reflect the behavior of buyers and sellers. Understanding this structure is going to help us, number one, identify the trend, whether something is bullish, whether something is bearish, or whether something is consolidating. Now, what we will always do is trade with the structure or trade with the trend. This is why it's very important to understand what the current structure in the market is. The second thing is that it's going to help us find lower risk, higher reward entries. And it's going to avoid emotional or impulsive trades. So as we said before, if we're only trading with the structure, then we aren't going to look to short a market that is in bullish structure, right? Because there's no reason to do that. If the structure is bearish, then the only trades that we're going to do is sit out or trade the downside. Now, bullish market structure is usually going to be the only market structure that we trade. And we're going to talk about why in detail in this video and in this live stream. So in bullish market structure, we look for a series of higher lows and higher highs. Price is consistently pushing higher and pulling back shallow, making lower highs or higher lows. I'm sorry. Pullbacks are the opportunities that we want to look for to buy at a discount. So in this example here, we have CRM. If we go to our chart, I'm going to turn off all of these indicators right now so that you can take a look at the price action alone. Now, this is going to be a weekly chart, which means that each one of these candles represents 1 week of price movement. If we take a look at this, obviously it is in bullish structure. I put this as the example here, and you can see that if we take a price tool, we go from this low here on October 23rd, 2023, price moves up, price pulls back, does not take out this previous low, so price makes a lower or higher low, then price breaks out to a higher high, taking out this previous high, then price pulls back once again to make a higher low. And now hopefully price is going to continue to break its way out. The important thing here is that price action, each and every single time that we pull back, is not making lower lows. Every single time that we see this pullback, we are making a higher low. This is a clear indication of market structure and a clear indication of bullish market structure. Now, D asked a very good question. Does it matter if we use candle wicks or if we use candle bodies? There really is not a major difference. Some people draw them differently. So what D means is, for instance, if we're looking at this low, should we talk about here where the candle bodies were, or should we draw it all the way down here to the wick? I was taught to trade candle bodies and to draw Fibonacci's specifically from candle bodies, but it really doesn't matter. There are times that I will draw from a wick because every single wick is going to act as a candle body. Now, I don't want to go too deep into this right now, but if we look at CRM here on the weekly chart and we were to take a Fibonacci, you're going to see that that is a wick. But if we go to the daily, that's going to be a candle body, because that weekly chart is made up of daily candles. So it's really up to you, but in most cases, I will try to draw predominantly from candle bodies. But you could draw from a wick if you want, because that's still part of the range high to the range low. So if we're looking at something like this, this is clear bullish structure because we're making higher highs and we are making higher lows. And we're looking, in this case, our time when we would want to buy would be on these pullbacks inside of bullish structure. These are basically going to be the areas of opportunity for us to buy the potential dip. And we're going to get into that a lot more in detail as we get going. What's up, Rex? Hope you're doing well. Glad that you can hear me. D says maybe weekly wicks are more significant than daily wicks. I would definitely say that's more important. Yeah, because the bigger time frame you have, the more important a wick is normally going to be. Because, for instance, like a monthly wick is going to be made up of weekly candles. Weekly candles are very important. A weekly wick is going to be important because it's going to be made up of daily candles. However, when you get to the smaller time frames, like a lot of times a daily wick is not necessarily going to be as important, but it's still a range low and it's still a range high. So it really just depends where you want to draw them from. Now, bearish market structure is going to be doing the same thing that we just talked about, but inverse. A good example of this would be the S&P 500 through 2022. If we take a look at this, we're going to talk about change of characters and stuff later, but if we take a look at this segment here for the S&P 500, you're going to see that price action was selling off, bouncing to make a lower high, selling off, making a lower low, bouncing to make a lower high, selling off to make a lower low. So this is a classic example of bearish structure. And remember, we want the inverse here. So the clear sign is that when we are bouncing, we are making lower highs. So in the beginning, when you're learning to show market structure, what you would want to do is go through and just mark off all of these lower highs each and every single time. And this is how we can tell that we have bearish structure. And then, of course, we're making lower lows. Now, structure will normally move in a continuation form until it ends up breaking. For those of you who trade Elliott waves, it's something that I never really got into. Maybe I'll do some research into it because a lot of people ask me, but the idea behind Elliott wave theory is that there is a set amount of waves or set amount of these continuations before everything flips around on its head. I think it's normally 1, 2, 3, 4, 5, and then A, B, C, D pattern. So for instance, I might butcher this. Like I said, I don't really know what I'm necessarily doing with Elliott waves, but you would have 1, 2, 3, 4, 5, and then you would have an A pattern, a B pattern, a C pattern, and then a breakout. And normally that's what an Elliott wave, or potentially I should say what an Elliott wave is going to look like. I don't necessarily trade based off of Elliott wave theory, but the point is this upward or downward structure is not going to last forever. Now, a lot of people ask me, and this is kind of putting the cart before the horse, like why I don't short the market a lot or why I don't look to short bearish structure a lot of the times. The reason for that is for most stocks, about 99% of the time, bullish structure will last 2 to 3 times as long as bearish structure, right? So what this means is that we are always going to lose money when structure shifts. So in this case, if we're shorting the market each and every single time price sells off, we're eventually going to lose when the structure shifts and becomes bullish. So we need to make sure that we have a long enough bearish cycle in order to make money if we're going to for sure lose when the structure shifts. Claire asks, what is time frame should you look to confirm first sign of bearish structure? Now, here's the nuanced thing that you're going to notice throughout all of this. Everything that we talk about as far as market structure can be used and should be used on multiple different time frames. So think of this kind of as like looking through a telescope, right? Like if we're looking at the monthly, there will be a certain structure. If you zoom into the weekly, there will be structure within a structure. Like, let's just use this as an example. Let's highlight this massive sell-off that ended up happening here on the S&P 500. That was one massive sell-off on that weekly time frame. But if we go back on the 1 hour, you're going to notice that the 1 hour actually had not just a massive sell-off. Oops, right here. There was structure on the 1 hour within this sell-off, okay? So when you looked at this on the weekly, it was nothing but a straight move down, but that's not how structure actually works. If we look here, you can see structure was making lower highs, lower lows, 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 etc. So really this would have been a break of structure in my opinion, but it ended up failing. So there is going to be structure on any time frame, and there really is no one specific time frame that structure is that you're only going to look towards. Now, I will say that like most of the time I'm predominantly looking at the weekly chart and the daily chart, right? Because the bigger the time frame, the more important the indicator, the more important the structure, and with the fact that like 90% of the people in this community have full-time jobs, there's no reason to be worrying about what structure is doing on the 1 hour or the 4 hour or the 15-minute in my personal opinion. But if you were a day trader, then you could be using all of what we're talking about here on a 5-minute or a 1 hour. It all matters. Now, something that's very important to understand and remember is that it's not going to stay within one structure forever. Structure is going to change. Now, I do not use the correct terminology, and I'm going to start using the correct terminology from here forward. I call these change in structures break of structure, because in my idea and my framework, the structure is breaking. So if we're in bearish structure and then we break out, that's break of structure. From my understanding, the way that it is actually taught is that it's called a change of character. So that's what I'm going to refer to this as going forward, because I believe that when I say break of structure, if anybody learned structure prior to this, they might get confused. So when structure changes, it's called a change of character. So after a series of lower lows and lower highs, if we start to see higher highs, right, and we're no longer sticking with that structure, that will be a change of character or a change of structure, and therefore the market will most likely move in an opposite direction. So in this case of the S&P 500, before this bear market that happened in 2022, you will notice that each and every single time that the market was bouncing and pulling back, we would make a higher low, which we stated at the beginning is an indication of bullish structure. So you can see here that we would pull back, we'd make a higher low. We would pull back, we would make a higher low each and every single time. Now we continue with this until a most recent low ends up breaking. So when these lows break, this would be considered a change of character. So this low that we had right here on October 4th, 2021, you'll notice that price ends up pushing up and then breaks below that low. This would be called a change of character. I don't know what ended up happening here. Oh, the daily. That's what I was on the daily chart. There we go. So this would be called a change of character. I put chance of character. Let's change that. So a change of character or structure shifting. So when this breaks, this is very important because it signifies now that there is a very high chance that price is going to continue to sell off, and then that structure is going to shift entirely. Okay. So from this point, wait, what just happened? We were in 2020. Okay, here we go. That was a different example. I don't know what the heck happened there. Okay. So looking at this example, we have that higher low. We talked about this. Now we have that change of character. We're going to mark this off as red. CHOC is what I'm going to put just to make it easy. So price takes out that higher low, and now we have a change of character. So in most cases, this means now that structure is going to shift. So if bullish structure means that we are going to get higher lows and higher highs, then what is going to happen when we switch to bearish structure? What should happen after price bounces? I'll give you guys a second to answer that. You can see it here on the chart, but I want to make sure that you guys are, on the same page. Exactly, Stefan. We should have lower highs and lower lows. So in most cases, when this change of character happens, and remember, we have to pretend that none of this is here to the right. But in most, what is happening here? I don't know why this keeps some reason, this just keeps automatically bringing me back to 2024 or 2025. There we go. But in most cases, what should happen is if structure is truly breaking, then price action is going to bounce and make a lower high. So when we get that change of character, what we're now expecting from this point is for price to be making lower highs as price action is selling off into lower lows. And that's exactly what ends up happening here. We can tag this as recent high. And remember, now because we're in bearish structure, it means that we're going to be looking for these lower highs. And then we can go ahead and mark this off as lower high. And this means that structure is shifting. Now, what has to happen in order for this bearish structure to be shift bullish? In order to get a change of character or a change of structure, what would we end up doing? In the interim, Tim says, so you don't use the wicks for your fibs. You can, in most cases, if it's clean with the bodies, I try to use the bodies, but you can use the wicks if you want. It really, from what I've noticed, is it really does not matter that much long term, especially since we're looking for zones. We're not looking for like pinpoint specific price action. Exactly. We would have to take out or create a higher high, right? So if we want to make a higher high than what Amar says, we have to take out that lower high. Well, that's exactly what ends up happening here. We sweep that lower high. Okay. Now, this could have been an early indication of a potential change because we didn't make a lower low, we made a higher low. But what we really want for confirmation is to take out this previous high. So this here would be a change of character. Now, remember what bullish structure shows. Bullish structure will tell us that price will make higher highs. This should actually come down to here. Price should make higher highs, and then what? A higher low. So when price pulls back here, the fact that we didn't take this previous low out is a very good sign that this next candle is going to be an expansion. Price pulls back, makes a higher low. From here, price ends up expanding. Price pulls back to make a higher low. Price ends up expanding. Price pulls back to make a higher low. Price expands, pulls back to a higher low, pushes up to a high, makes higher low, etc., until we get a change of character here, most recently in 2025. And then we just rip to all-time highs, which normally I would not expect that to happen. But once again, this is why we focus most of the time on trading only the long side, because these downward moves or these bearish change of characters and bearish structure normally do not last long. So does everybody understand the basics of what a market structure looks like and how we can tell when structure is shifting? If anyone has any questions about that specifically, we can talk about that before we move on. A lot of the times as well, is that you'll normally notice that when we get these structure changes, they also normally correlate with head and shoulders or inverse head and shoulders patterns, right? So here we have a head and shoulders pattern because we make that lower high. Here we have, a head and shoulders. Here we have an inverse head and shoulders. So these will normally correlate with structure shifts. All right, Claire says very clear. So we understand that. We understand that what we want to trade is with the market overall, right? What we want to do is trade with the overall structure. So we want to make sure that we're trading with the structure primarily, what we're going to talk about next when we get into Fibonacci's and when we get into market bias, is that we want to be trading on those pullbacks. So we really want to be trading on the pullbacks in the higher lows, and then we want to be accumulating or turning the bots on within those higher lows and then playing that expansion, which means that when change of characters happen, we are going to lose money. Right? There's no way around it. And there's no way to actually tell when that structure is going to shift, right? We could try, but there's really no way we'd be pick and choosing, and we would really be focusing on kind of gambling at that point. So there are tools that we can use here to find those areas of opportunity. And the two tools that you guys probably see me use the most is going to be the Fibonacci retracement and then the actual market bias, which we're going to go over after that. So Roby asks a very, very good question, right? So Roby says, is what you're teaching us work for high beta stocks as well, or it doesn't matter? It honestly doesn't matter. Now, stocks that are going to move relative to the S&P 500's volatility are normally going to be very strong to trade with this structure, right? Because if we'll talk about this as we get into like the Mag 7, which is we're going to be like a lot of the easiest use cases with this. It's easier when a stock moves with the S&P 500 a lot more because it's very rare that we're going to be in a massive downtrend. I mean, if we just zoom out on the monthly for the S&P 500, it's very rare that the market is going to actually be in bearish structure or downtrend for a long time. Well, it looks like TrendSpider just decided to not work. Okay, there we go. So you'll see that there are times where structure will break, like the 08 financial crisis, for instance, back here in 2019 and 2020, but it's very rare that the market will actually be in bearish structure for long. But on stocks that don't track with the S&P 500, we could see significant downward market structure for a very, very long time. Like a good example of this would be Palantir, right? Like Palantir before this massive rally was in bearish structure basically from 2021 all the way to 2023. But then after that structure shifted and we had change of character, it's been in nothing but a bullish structure since 2023. So it's a very, very good question, Roby. And we'll go into that a little bit more as we talk about examples and go over the Mag 7 and stuff. So let's go to CRM since we were starting off with that one. Now, the first and the main tool that we are going to use in order to draw and find these areas of opportunity is going to be a Fibonacci retracement tool. Now, I'm going to start by saying that this is why, as much as I try to use trading bots, as much as I try to back test things via software and everything, what we're going to talk about right here is why, in my personal opinion, human trading is still the best thing and will beat trading bots each and every single time. And it's why trading bots and algorithms on Wall Street, I guess, have taken over human trading. But from a retail perspective, there's a reason why humans still beat trading bots. The thing that a trading bot has that a human doesn't is infinite discipline, right? Infinite discipline. If every human could learn what we're talking about right now, but have the discipline of a robot or the discipline of a computer, then we would all be better off than most retail traders are. Now, the problem that we have with any type of algorithmic trading is that it has to rely on indicators, which is not going to be the same as drawing a Fibonacci retracement or actually finding these levels by eye. So this is why we can't, unfortunately, take the Fibonacci and put this into a trading bot or put this into a back tester. There's no way to do it because you can't just say, go from most recent low, go from most recent high. There's no way to actually code that into an algorithm. But what we want to focus on is using a Fibonacci retracement tool to find key areas where institutions are most likely going to step in. Now, the settings that we're going to be using is 0, which is going to be the start of the move, 1, which is going to be the end of the move, 0.618, which is going to be the retracement or the start of the golden zone, which we're going to talk about in a moment, the 0.786, which is going to be the deeper golden zone or a deeper area of opportunity, and then the absolute lowest is going to be the 0.826, which is the optimal trade zone, or what I call the smart money zone. Now, these Fibonacci levels are sequenced is universal ratio that's found in nature and trading to predict pullback levels. Like we said, the 0.618 and the 0.786 is going to be the golden zone, and the 0.826 is going to be the smart money zone. Now, the reason that these zones tend to work, right, and I want you to understand, it's not like there's some sort of like math, like cryptic math, and then there's some reason that the market's bouncing. It's not, right? What you need to realize is that if we were to look, in this case, let's use CRM, and let's just pretend that like none of this is here. That the only thing we're focusing on is from October 16th, 2023 up until where this market starts to sell off here in June. The way that we draw a smart money zone is that we have to find the most recent low and we have to find the most recent high. So in this example, the most recent low would have been down here at $196. The most recent high would have been up here at $316, right? So we're on the same exact track. That's our recent low and that's our recent high. So what we're going to do is take our Fibonacci retracement tool. From that low, you can go from the wick if you want, but in most cases, like I said, we're going to go from candle body up to that high. And then we're going to pull this out here to the right. Now, the settings, so red candle to green candle. Yes, but it's not, there might be times where it's not always a red candle and it's not always a green candle. Like for instance, let's say that this candle here actually opened up, like the market gapped down and then closed higher. In that case, we would actually go from a green candle, right? If that were the case. It's not here, but if that were to happen, then that would be the case, right? So it's not always red to green or green to red. It's just from low to high. Now, if you have to question if it's a low, it's not going to be a low, right? Like this wouldn't be a low to a high. It will always be a clear, like, okay, that's the bottom of the range. I can easily tell. If you can't tell, then it's normally not going to be a low. Now, if we click here on the Fibonacci, as we said, the levels that we want to have on is 0, 1, 0.618, 0.786, and 0.826. Now, these Fibonacci levels represent percentages. But the thing that you have to remember is that we're not talking about the percentage of the stock, okay? We're talking about the percentage of the range that we drew. Remember, the range is from low to high. So when a stock pulls back to that 0.826, fundamentally, what does that mean? How much have we pulled back in percentage-wise from that low to that high? I'll give you guys a second to answer. Exactly, Amar. 82% or 82.6%. Exactly, Tim. And exactly as Tim said, of the previous move. So here's the thing you'll realize. We pulled back 82% of that range, but the stock only pulled back 32%. So when we say 82%, we don't mean the stock actually pulled back 82%. We mean that within structure, within the recent range, 82% we have pulled back. Now, I want you to think about this just from a fundamental standpoint. If the stock is bullish and structure is bullish, and the price pulls back 82% of that recent move, are you getting a discount or are you overpaying? D, exactly. Tim, exactly. We are getting a discount. So I want you, I don't actually do this anymore, but I want you to think about it this way. When we're drawing our Fibonacci's, the top of this range is a premium. We do not want to be buying within the top of this range. The smart money zone, which we're going to talk about in a moment, or this 0.786 to 0.826, this is a deep discount. And then this middle range here, which I do not have the 0.5 up, but the 0.5 would be considered equilibrium, or you're basically getting a fair value. You're getting a decent value. So when we're looking at this Fibonacci, the very top is going to be premium. That is not where we want to be buying. The middle is going to be basically fair value. And anything under that within our other Fibonacci zones is going to be a discount. So what you have to remember and what you have to think about here is that the only way that a stock is going to move, right? The only way that the stock is going to move is that other participants who can actually move the market are going to buy into the market. Now, using the framework that I just explained to you, do you think institutions with hundreds of millions of dollars are going to be buying up here at that top of that range? Do you think that they're going to be loading up hundreds of millions of dollars at the top of that range? This entire game of trading is literally just a seesaw of buy-sell pressure. So if we're looking at the weighted scale or the seesaw, no, they're not going to be buying at the top exactly. Where are they going to be buying? In most cases, within discounted range. Now, here's it's kind of mean, but who do you think is buying up here? Because there's always somebody buying. Retail, exactly, Alex. Yeah, Wall Street Bets, Michael Saylor, people on X, noobs. Yeah, people who are chasing. Exactly, Tim, suckers. As sad as it is, right? And here's the thing, we've all been there. Right? We've all been there. We've all been a sucker at one point. Wall Street Bets, yeah. Like, and that's the thing to remember is like we've all been there. It's just people who are riding the hype, people who are expecting the market to continue to run. And now I want you to think about this like clockwork, right? If you're an institution and you're buying down here, you are selling the bag to people up here. Right? And this is where we're going to talk about taking profits and stuff, right? When we get into a low longer, but the goal of institutions is to buy low, sell high, right? So they're not going to be buying up here. Shell, keeping this in mind, how and when should newcomers get into the market and start buying in the main fund? Because the market is always at a premium right now, and that will always be an issue. So that's a good question, right? I don't want to go too far right now into this, but let's, we can very briefly talk about this because it's a very good point, Shell. So when we look at our weekly watch list, right, this is predominantly what everything in the weekly watch list is going to go off of. If I was a newcomer to this community, what I would be doing is wanting to focus on the stocks in the main fund that are still in a discounted zone. So like, for instance, some of the biggest profits that we've had recently, Roblox, okay? Do you think that we are at a discount or do you think we're at a premium? Now, we started buying Roblox down here, right? So Roblox now is up about 100 and, well, not, we didn't get that absolute low. We got in like around here. It's up about 78%. We're trading at a massive premium, right? Now, this is why we use the BX trender, and we're not going to get too far into this because I want to talk about this in more detail later, but this is why we use the BX trender to help keep us in these trades. Because if we just went off, and I sold Roblox too soon, right? Like we took this off the watch list a couple of weeks ago. But if we just use our eyes, we would sell too soon because we'd say, hey, this is at a premium. But like if I came into the community, this is not a good time to be buying Roblox, right? Another one was Coinbase. Okay, Coinbase is another good one. Are we trading at a premium right now for Coinbase, or are we trading at a discount? And this was almost a break of structure. But think of what we just went over. Are we trading at a premium or a discount? Exactly, we're trading at a premium. So we don't want to be buying. We wanted to be accumulating down here, which is what we were trying to do, right? Now, let's take a look at Robinhood, another one. This was another one that we did really well on. Are we trading right now at a discount or are we trading at a premium? Right? We're trading at a massive premium. SoFi is one that we didn't hit. But do you think that we're trading at a premium or do you think that we're trading at a discount? A premium, right? Now, here's the thing I want you to understand. There is still a lot of money to be made when we're trading at a premium. It just means that we don't want to start a position there. So what I like to do, like for Robinhood, is I like to turn the bots on or add something to the watch list here and then keep it on until we actually close a top so that we can get the length of this. Now, let me ask you a question here, right? If we were accumulating inside of this range and then we were playing this breakout, Do you think we could have made money? I won't even ask you the question. The point is, we could make money doing anything, right? If you fundamentally understand if you're buying into a premium or you're buying into a discount, you could make money doing any strategy. And this is why like a lot of people come into the community and they're like, "Hey, what's the best bot? Is it buy and hold? Is it the daily BX? Is it the 1 hour?" Guys, we could do anything in that type of market and make money. You could have day traded hood and made a ton of money in the past couple of months. You could have bought and held and made a ton of money. You could have traded the daily and made a ton of money. You could have done anything and made a ton of money, right? So that's the important thing, is to instantly be able to look and say to yourself, is there going to be a premium? Am I going to be getting in a premium, or am I going to be getting in at a discount? Tim says, go to the lower time frame and look for a pullback to see tighter stop losses. Yeah, and you can see here, look, like even at the daily, within that daily, the whole time we were still making bullish market structure. If we look at the 1 hour, look at what happened here. We're holding bullish market structure the entire time. Now, I don't want to get too far into this, but we could also just actually take a look at the market bias. The market bias is usually going to show market structure, but I don't want to get too far ahead of ourselves just yet, because we're going to go back to what we were doing earlier. But going back to Shell's question, now let's go through some of these other stocks, right, that we're looking at this point. MongoDB. Let's get into the weekly. Are we looking at a discounted range right now, or are we looking at a premium range right now? Right? In this area, we're trading at a discount. So this could be good for us to potentially buy into as a newcomer. Let's take a look at Boeing. Are we buying into a discount right now, or are we buying into a premium? Kind of like equilibrium, right? We're not at a discount. The discount would have been down here, but we're not trading at a massive premium, right? This is kind of like that fair value. Exactly, Shell. So this is something that we could actually add into. Let's take a look at Zeta, right? Zeta or MRK. Are we trading right now on MRK at a discount, or are we trading at a premium? Right? We're trading at a discount. Zeta. Discount or premium? Discount. So what I would say is to focus on the stocks within the watch list. SMCI, discount. SoundHound, discount. IONQ, right? Bit of a premium. The time to really would have gotten in was back here. Example, knowing AMD is heading towards $200, would you wait or enter anyway? Have we missed the bus? So that's a good question. We'll talk about this one before we move on, right? So what do we notice right now about... This is actually a very good one to talk about because it's very tough. What is the market structure for AMD right now? Is it bullish or is it bearish? It's bearish. Exactly. On the weekly, okay? So if we were to take a Fibonacci retracement from that most recent high to this most recent low, we are in the golden pocket, or the area of potential rejection. Now, here is where things get a little nuanced, because we talked earlier about what's the best time frame to do this on. Well, the weekly is bearish. But if we look at the daily, what is the market structure? Bullish. Exactly. And why is it bullish? Because we took this previous high at 114 out. So I think ultimately that this bearish market structure will probably break. And I do think that we're going to see a push to $200. But it wouldn't surprise me if price pulls back, right? Now, here's the thing. What we talked about constitutes, right? Oh, you just did a reverse fib and might want to clarify. Yeah, so remember, when we're doing market structure, we have low to high, high to low. So when we did CRM, right, we're pulling that fib from low to high because market structure is bullish. But when we're looking at market structure that's bearish, we are pulling the fib inverse from high to low. Very, very good point bringing that up. We're pulling from high to low. And what we would want to do is remove our shares in what would normally be our discount zone or potentially short. For instance, you can see that this would have been a great short opportunity back here on AMD in October 7th. Now, remember, we talk a lot about lower highs, lower lows. So what we will normally see in these types of situations is that AMD will pull back, but not make a lower low, probably make a higher low, and then sweep. Now, can anybody tell me how we could find most likely where this higher low would be? We would have to go into the daily, and because that's what structure's bullish, exactly. And we would have to take a Fibonacci retracement. So we would go from low to high. And the worst case scenario that price would probably pull back to would be 110. To worst case, I don't think would happen, would be $93. And that would fill the gap down here. Now, here's where things, or market bias, which we're going to talk about market bias in both of these examples in a minute. Now, here's where things become tough. We have no idea what's going to happen, right? Like, we can sit here and we can hypothesize all we want, but we have no idea what's going to happen at this point. So going to the question, I think Shell asked, like, is this a time to be buying? Well, and I don't want to get, cart before the horse, but if we put the weekly BX trender up, it's still showing buying pressure. So for me, what I would say is that if I was not in AMD yet, I would personally not be buying this, right? Because I do think that structure is going to break, but the upside is 40%. The downside is 30%. So that is not a high enough risk versus reward for me to personally be doing that. Now, Shell said, is the BX maxed out? We don't know. It looks like it's maxed out, but there's no real way to tell, right? So in my opinion, there's two ways that I would trade this. One, I would just sit out because there's plenty of other stocks that are trading at discount. If I got in when we were getting in down here, then I would just continue to hold until the BX tells us no, right? So this is why you're keeping your leaps 100%, Stephane, but it's also why I have not averaged down on them, right? Now, the other way that we could do this is we could size in right now with 50% of our planned position size. So let's say that we wanted $100,000 worth of AMD for the next couple of months. I would go in with half of my position here, and I would save the other half to average down here. So if AMD just skyrockets into oblivion, right, I will make at least something. If it pulls back, I will have an average somewhere of like $112, which would be solid. But in this case, I would say it's not necessarily like the most ideal time to be buying into AMD. And with so many other stocks out there that are currently trading at pretty good discounts, I think that there's better money to be made in some other areas, right? But that's why I pulled, to give you guys some clarity, that's why I took my shares off the table, right? I'm still holding my leaps because if the market rips, I want to be a part of it. I want to be a part of AMD. But I took the bulk of my shares off the table, number one, because I needed capital, but number two, because this is not a discount anymore, right? And I don't want to hold if it comes back down to $100. But we're going to talk about AMD in more detail as we talk about market bias. So we understand smart money zones. Let's talk about that very briefly. So let's go back to CRM. Now, the way that I was taught Fibonacci's, I was taught from my mentor not to only use these two, the 0.786 and the 0.618. He did not teach me the 0.826, right? A lot of people ask me, like, who was my mentor? His name was Ty Cody. Unfortunately, I know he trades still, but I don't think he teaches. He used to have a school back in the day. I think that he really just enjoyed, like, I love teaching, but, like, there becomes a point, especially like when you're a successful trader, that if you don't love it, then there's no reason to do it, right? Like, there just isn't. but he doesn't teach anymore. I've told him to like start doing YouTube and stuff because he would crush it. But he doesn't necessarily teach. Now, what I was taught and what a lot of like old school guys know is to use the 0.61. Actually, let's talk about this very briefly. So let's put a 0.50 up. Okay. What old school traders in the 80s were taught was to buy here between the 0.5 and the 0.618 because they were taught that you're buying the stock at a fair value. Now, what would end up happening in most cases now? Institutions learn, right, that people are loading up here in the 0.50 to the 0.618. And so they would run a stop hunt. Does anybody know what a stop hunt is? Or does anybody not know what a stop hunt is? Actually, we'll ask that first. If you don't know what a stop hunt is, I can go into detail about it. And you can actually see that massive red candle legitimately was a stop hunt on CRM. Mo, I don't know. Okay. So a stop hunt is basically a liquidity raid or a shakeout, like Shell says. So I want you to think about it this way, right? If we're going to remove the 0.826 and the 0.786, and we're just going to keep up the 0.5 and the 0.618. So think of it this way. If you're buying at discount here, where are you going to most likely set your stop loss? If we're looking to enter between the 618 and the 0.5 and we're not using any BXs or anything, like where are you probably going to set your stop? Five to 8% below. Okay, so it could be a specific percentage, but the thought process is you're normally going to set a stop loss below your entry or below the 0.618, right? So in this example, you have people who are probably going to be setting stop losses maybe here. Maybe some people will put them down here. Maybe some people will put them down here, right? So if institutions know, hey, everyone's buying between the 0.5 and the 0.618, and all their stop losses are sitting underneath of the 0.618, they will purposefully run liquidity, push the stock through, tag all of these stop losses out, and then fully reverse the market. Right? So think about it. In this 1 week, right? 1 week here, they legitimately would have put all of those people out. They would have stopped everyone out of those positions. Actually, so Roby, very, very good point. So Roby says, I went to OTA, which is Online Trading Academy, and they taught us to change the 0.826 to the 0.886. 100%. So I have not used that, but that totally makes sense, Roby, when we're thinking about the psychology behind this, right? So I want you to think about this. Institutions know now that people are buying in these areas. So what smarter retail used to do is they said, okay, screw the 0.5. We're going to run a 0.786 and a 0.618. Okay. And what this means is now if we start buying here, then they think that they're running all of our stop losses, but we're going to set our stop losses even lower. So now you have people setting stop losses even lower. And this, honestly, most of the time, if you're running this area, the 0.618 to the 0.786, that's called the golden pocket, okay? So this gives us a better chance to not get stopped out of a position. So think of it from a psychology standpoint. Now, when they run the stop loss, since you're waiting to get in later, your chances of getting stopped out are even lower. Now, here's what I have done is I was taught about this golden zone. I was taught about the 0.618. But what I like to use is the 0.618 and the 0.826. Because my thought is if everybody is buying here, then I really want to buy here. And then I can set my stops below that. And the chances of us getting stopped out now become significantly lower. Now, I want you to also remember, right? And this is very important. So from a psychological standpoint, like we're just playing this deeper and deeper and deeper and allowing them to run the stops. Now, I want you to also understand this. I never run a stop loss. And to some of you coming into this community, maybe from other communities or learning from other people, I do not run stop losses. Does anybody know what my stop loss is? It's not a percentage. It's not a numerical value. It's based off of basically one thing: the BX trender and the BX trender closing lower low. Now, what is the most important thing that I just said in that sentence? BX trender closing lower low. What is the most important thing in that sentence? And this alone will just change your trading forever. 100% Rex, gold star, exactly Mo, exactly D, exactly Payment, exactly Tim. Yes, closing. Okay. I never set stop losses or have an open position for a stop loss because there's a very high chance that it's going to run. Now, I want you to think of CRM in this example. Even though this broke the 0.826, would we have gotten stopped out? No, because it literally bounced from low to high 10% and did not close underneath of that. Now, if we look at the BX, if we were going by the BX, we probably would have stopped out. I don't know what that looks like, but just from price action here, right? Like we would not have gotten stopped out, right? It literally would have tagged all the weak hands out and we would not have gotten stopped out. And that's why waiting for candle closure, whether you're trading any type of strategy, is, in my opinion, the most important thing possible. Because I cannot tell you in the beginning of my career how many times I set a stop loss, I walked away, the stop loss got hit, and then the market traded in the opposite direction. And I'll tell you this, right? It's not even about losing the money. It was about me having to sit there and quite honestly, which you shouldn't be this way, but like hate myself for it. And it's because market makers understand this. Like they will purposefully drive stock through a support, through a resistance, tag people out. The stock will go the other way, right? And that's why waiting for candle closure is so important. I can't even explain to you how important it is, right? Like even looking at this example here, like price broke right up, and then look at that wick. If you would have waited for candle closure and you were shorting, you wouldn't have gotten tagged out. So the smart money zone is the 0.786 to the 0.826. As we said, institutions, aka smart money, do not chase price, right? They wait for price to come to them. They accumulate during pullbacks, right? They accumulate looking for a discounted price before entering, and they prefer structure to go with structure, not against it. So Payman brought up a really good point. So Payman said that based off of our BX strategy, we would not even have taken a trade here. And you're totally right. So I don't want to go too sideways in this, talking about this, but if you traded with me in 2023 and 2024, we used the BX trender, but we were predominantly trading market structure. The BX trender and the weekly BX trender and the strategy that you guys see and that you know of today came from me wanting to give members hard rules, right? We actually performed better, much better in 2023 and 2024 than we're performing now. Like 2023 made almost like a 200 and something percent return. We were trading only smart money zones. Now there were stocks and trades that did hefty lifting for us. Like Affirm, for instance, like was one of the biggest trades that we had in the entire year. We were accumulating through the smart money, and then we had basically like a 200% move here. But I wasn't using the BX trender to get in. What I was doing back then is we weren't using the weekly. We would draw smart money zones here on the weekly chart, and then we would zoom into a smaller time frame and we would find the very first higher low and enter there and then set a hard stop loss at a lower low. We weren't even using the BX to get out, right? But the main reason that I'm focusing on using this strategy with, BX trenders is because I truly believe, right? And I'm thinking at some point when I have like less funds and I'm not focusing on as much stuff, doing like a strategy where I trade solely by eye and I don't use like hard set rules. But the reason that I use hard set rules with the BX trenders specifically is because I believe that for 99 or not even 99, I should say 90% of traders, having rules is more important than having a strategy that's going to do better if it's up to you, right? Like just sticking to a strategy, having a strategy, knowing exactly what your exits are, exactly what your entries are, all of this is very, very important. Johnny brought up a really good point. You can use these in tandem, can't you? Exactly. Yeah. So this is kind of what I'm moving towards now. Um, what we used to do is when price would pull back into a smart money zone, I would just turn the bots on. At the time, there was no BX bots. There was the 1 hour swing bot and there was the 15-minute quant bot. And then we would just buy and hold on the weekly. So what my plan is right now is to turn on the bots, right? And I would turn on the trading bots inside of that discounted zone. That would be my goal. And so that's kind of what I'm doing now is like when price pulls back into those discounted ranges, I'm going to turn the bots on. And what the bots are going to do is actually just protect our downside. But yeah, I mean, that's kind of the goal from this point. All right, we're going to talk about market bias. If I don't know if I'm going to lose power, but I just got a emergency from the National Weather Service saying flash flood and tornado warnings. So hopefully we don't lose power. But yeah, Johnny, we can use that in tandem, right? I think that having a strategy is very, 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 very important because it helps you with risk management and stopping out, which I think is the thing that like 90% of people have problems with. Rinku, what's up? Thank you for being here. Peter, love your content. Do you think about some people saying technical analysis is horoscope for men? I mean, it is, right? Like, here's the thing. Like, what we are talking about right now is not technical analysis. What we're talking about right here is market psychology from the biggest participants in the market. Right? Like we're not saying like here's a shooting star and here's a hammer doji and here's this and here's what if like we're literally what will change your trading over anything is just knowing what is the current structure. Are you buying at a discount or are you buying at a premium? Then you enter your position, you stop out once your criteria is broken, you buy in, you sell when you start to scale out as you get to a premium. So I would say that for like 99% of technical analysis is horoscope for men. If you're not taking market psychology into things, right? You have to be taking market psychology into what you're doing. And you have to understand if you're buying at a discount or not. Now, I want to also have you guys realize before we move on to talk about market bias, for the longest time, I didn't use a BX trender. Right? The way that I traded, and this is where I'm not going to lie, like I had a lot of success doing this, but I felt like it was harder for students to stick to, which for me, like here's my, I want to give you guys my psychology, right? I love teaching and I love sharing all this time and energy with you guys. It gives me, I don't want to say like something to live for because that sounds sad, but it gives me meaning, right? Like trading does not give me any meaning at all. It's just pressing buttons. I don't feel happy about it. I don't feel content. I don't feel like I'm making a difference in people's lives because I'm just not. Straight up. Like I'm just not. Pressing buttons and making money, I'm not doing anything that like actually gives me value or makes me feel happy or proud in what I'm doing. But I'm not here to just make money myself and talk. Right? Like if what we are doing is not transferring over to you guys and changing your life and making an impact, then why am I doing it? Right? Like I really feel that way. I'm not here to just like collect money for memberships and do whatever. Like I could just go fuck off on a 4-month vacation in Italy if I really wanted to right now. Right? But like I don't do that because I enjoy teaching and I want to make sure that what we're doing transfers over to you guys. And I feel that the pure systematic edge that we've been doing and executing for the past year and a half translated a lot better to people than kind of what we're talking about right now, because the exits were more arbitrary, the entries were more arbitrary, and the guardrails basically of why you would enter and exit a trade were a lot harder, right? Because we're going to talk about Fibonacci extensions in a moment, but that's another part of it, right? Now, the way that I used to trade is we would just take a Fibonacci retracement from low to high, right? We would wait for price to pull back into the smart money zone, and then we would enter our position. We would set a stop loss at break of structure. Or a change of character. Can anybody tell me what that would be? What here would been of change of character? Thank you so much, Roby. It really means a lot. It really does. Because I love what I do here. And if I don't love what I do, and if I don't think it's helping, and I don't think if it's transferring over to you guys, then there's no reason to do it. A lower low. Exactly, Tim. And what's up, Richard? Glad to have you here, man. So what would that lower low be? Where we drew the Fibonacci from. So where we drew this Fibonacci from would be the lower low. So that means our stop would be a close, not tapping, a full close under that previous low. Okay. Where do you think our take profit would be? I don't like to get out just like at one time, but like, where do you think we would start to be saying, oh, we might want to get out? Yes, let's go, Shell. Yes, Stefan. At the premium. So up here. Right? So what I used to do is take 50% off the top at equal highs. Then I would use the BX trender to take the other 50% off. Now, what do you notice about this? What is our risk versus reward here? It's nearly 3-1. Okay. You can only be right 50% of the time with a 3-1 RVR and make a killing. You could be right as low as 25% of the time and break even, or actually probably even make a little bit of money doing that. And our win rate by doing this was about 60%. This is why I want to start bringing this back in, because what we've been doing recently is fine, right? It's fine. So the way that you find a 3-1 RVR is if you use the draw tool, right? It'll tell you 3-1 RVR, but you don't even have to do that. You just have to take your loss, which our worst case loss would be 13%, and our best case profit is 42%. And 42 is 3 times 13. Yeah, so once you get that equal high, your RR flips, because then but once again, we wouldn't be setting a stop loss down there, but if we were up here, then it would change, right? Now, if we look at how our strategy and what we've been doing with the BXs and everything right now, if we take a look at that before we move into market bias, you would notice that we would not, if we were using the monthly, we would not have actually gotten into this position until here. And we would have traded that breakout. And that's fine, right? Like, we still would have made, based off of our current strategy, about a 20% profit. But if we would have just turned the bots on within this range, we could have pulled maybe a 30% profit, right? So that's why I want to start turning bots on when we're inside of these smart money zones, because I think it's going to help give us a better risk versus reward, which is ultimately going to make us more profits. I think that marrying the two of these strategies together is probably going to be the best possible thing that we can do. So everyone's good with that, right? Everyone have any questions about what we've talked about so far? Now we're going to go into market bias, and we're going to talk about fib extensions, and we'll do a Q&A. When the monthly goes higher low versus green, yes. So honestly, what I'm probably going to be doing now is when the monthly is higher low, or when the bias ends up, you'll see when we pull back into the market bias. And this is where it's tough, because I can't say in a trading script, when we pull back into the monthly market bias or when we pull back into the quarterly market bias. There's no way to do that. But yes, Richard. So when we pull back into a smart money zone or a bias, we're going to turn on the bots. We'll talk about market bias and stuff as we get into this now. Okay, so let's talk about the market bias now that we've gone over Fibonacci's. So the market bias is a tool. Let me see. Hold on. So Stefan says, and we could keep our positions rather than getting in and out several times as the BX flips. Exactly. Yeah, that's the other thing too, is that we could just hold the positions throughout, which is what I'm most likely going to end up doing. Something else that I used to do, I don't want to mess with you guys too much here, but something else that we used to do is we would look at those levels. So let's go back to this fib. We would find, now at this time, I was trading one fund. That was it. There was just one fund in the community. It was much more active than buy and hold. But what we would do is we would wait for that smart money zone. We would enter off of the daily chart. So when the daily started showing buying pressure, then we would wait to see if the weekly closed high or low. And then we would switch to the weekly chart. And then if it continued breakout, then we'd switch to the monthly chart. And so we would enter on the daily, hold on the weekly, and then exit back on the daily as we got to the top. But once again, like that's not as concrete of rules of what we have now. And I believe that for like 90% of people, what they need is a system over the best system possible. Like they need guardrails, they need rules. I think it's very important. So the market bias, right, is a tool that I give to a lot of people like as soon as they join the community, right? It's an overlay that's going to essentially very loosely draw out your zones for you. So when people would come into the community, they'd be like, hey, where do I draw Fibonacci's from? Like, I don't know what's a low. I don't know what's a high. I don't know like where I should be going from. Like, should I be drawing from here? Should I be drawing from here? Should I be drawing? Like, I have no idea, right? And so what's funny is a lot of people ask me, hey, where did you come up with these numbers? Because if you use the market bias settings are not this. This is not what the default market bias is, right? And it's not like I pulled these numbers out of thin air. For some of you, you probably know this. Some of you, this might be magic, right? As Tim says. So the way that I found this and the way that I got those numbers is I would take my Fibonacci retracement and I would draw it out. And what we're going to be doing here is we're running an overlay. Okay, so for anybody who is on TradingView, this is going to look a little different. Launch charts. If you're on TradingView, you can come into your market bias and you're going to click this settings button here and you're going to change time frame from chart and you're going to change it to month. You can also change it to quarterly. You can change it to whatever you want. But in this example, we're going to be using the month. Okay? And we're going to be looking at a weekly chart. If you're using TrendSpider, you're going to come up here to MTFA, which is multi-time frame analysis. You're going to click that on. And then you're going to click the monthly button. Okay? What do you notice about the monthly bias? The monthly bias will normally always correlate with the weekly smart money zone. So what you'll notice is that the bigger time frame bias is going to line up with your smaller time frame Fibonacci's. So a monthly bias is going to line up with your weekly Fibonacci's. A quarterly bias is going to line up with your monthly Fibonacci's. A weekly bias is going to line up with your daily Fibonacci's. So if you're somebody who is bad at drawing Fibonacci's, or if you're somebody who doesn't want to draw Fibonacci's and you just want an indicator that's going to do most of the work for you, this is how you're going to do this. And this is how I came up with those numbers, because I realized, shit, I can just hand this indicator to people and it will basically draw those Fibonacci's for them. All right. So if we look at CRM, pretty strong example of those Fibonacci's. Look at this back here. Structure broke, right? Structure broke here. What happened to what happened to the market bias? It turned red. When the market bias is red, structure is bearish. When the market bias is green, structure is bullish. Let's look at the S&P 500, right? Now, this is a different example because we're actually using a weekly, and we have to go back to the daily chart. So that's what we were pulling that on earlier. Here we go. What do you notice, right? We talked about this earlier. We talked about how this was our change of character. When the daily broke structure, the weekly bias turned red. So every single time that we push into the weekly bias could have been a short opportunity, right? Or a time to, if you were buying the dip, take profits. What happens when we break structure here? The weekly bias turns green. And then every time we pull back into this bias, it is a dip buy opportunity. There are times that it will break, right? Now, here's the thing. Does it matter if we're looking at the top or the bottom market bias ribbon? Not necessarily. So the thing about the market bias that you have to remember is we're not looking at this as one specific level, right? We're looking at this as a zone. So we know that when we're in the bias, we are in a discount. It doesn't necessarily matter the top or the bottom. The further down that we get, right? The further down that we're inside of that, then the more of a discount you have. Now, I want you to also realize something. The market bias is not perfect, okay? This is why I want you to still understand how to draw these Fibonacci's, okay? Because if we take a look at this example here for the S&P 500, here's our low, here is our high. Did structure break? No. Yes, Tim. So it's if you go to the actual trading library, you'll see the market bias, but it's 28.8. Yeah, let me get back into this real quick, but it's 28.8. I can come up here into TrendSpot or Trading View. 28.8 and then change from month to, or from chart to month. So notice the market bias said that we broke, but we really didn't. And this is why, once again, like, it's better to have a human eye than it is to fully run off of indicators, because indicators might mess up. This did not break structure, right? Even though it told us it did. So this is why, even though if you're using a market bias, it's a nice tool, but always use your eye, right? So this is going to help by giving us market structure. This is why, right, we were buying the dip on the S&P 500 back here in April. Anyone who was here in April, like, we didn't turn the bots off. We didn't think structure broke. Like, we were buying this dip. And if we go back, right, we broke here momentarily. Here's another thing though, right? If we're looking at this macro structure, did we break structure on the weekly? No. Right? The daily broke structure, that smaller time frame broke. The bias turned green, but why did we not break structure or change character? Because we didn't take out this low. So we would have been dip buying here even though that bias was red. Okay? Now here, structure actually did break momentarily, but that was a pandemic. But if we look, like, the S&P 500 normally does not trend and break structure unless it's the 2008 financial crisis, right? Where this really broke structure, like full dead on broke structure. If we go back, the only other time this happened was the .com bubble, where we fully broke market structure, like, for sure. So the market bias is a great, quick indicator, but it's, of course, not going to be absolute perfection. And what I want to be doing here is I want to say, let's turn on the bots when we're inside of a monthly or a quarterly market bias. Oh, Adam. So, yes. So let me see. There is no market bias for TrendSpider. You have to use, I'll send you, I'm going to put, if anyone's using TrendSpider, I'm going to put this in the chat. This is the indicator that Colin ended up making. So if you click TrendSpider Custom, you will see the market bias, which Colin ended up making, and then you'll see the BX trender, which I ended up making. So if you click on the market bias, you have to hit login and import, and then you will get access to the market bias that way. So Shell has a question. Can I ask a recent example? Why? Yes, hold on, I'm sorry. So Amar said on the daily chart, do we use the weekly market bias? Correct. Yes, correct. And on the weekly chart, you use the monthly market bias. On the monthly chart, you use the quarterly market bias. So Shell said, can I ask a recent example? Why did you add Tamara in the recent pullback? What made you certain that this was a temporary pullback? I looked at the daily BX lower high and concluded we would correct. Obviously, you made the right call, but I did not. Okay, so very, very good question. Total luck, Shell. So let's look at Mara, right? Let's look at this first, just like on a bigger time, on the weekly time frame, right? And then we'll talk about that most recent pullback. So if we look at Mara, let's just remove the bias like entirely, okay? Market structure was bearish all through like here, okay? If we look at structure, we had sold off, we broke that previous low, made lower low, lower high, lower low, lower high. We did not take that previous high out. This here is when structure broke or change of character happened, right? So looking at this, we know that this is where that structure break occurred. So if we look at Mara right now, we know that we're actually in bullish structure because here's our most recent low, here's our high, here's our smart money zone. So we focused, and here's the thing I want you to understand. We don't give a shit about any of this. Why do we not care about anything that's up there? And I know that this is not necessarily answering your question yet, Shell, but it will. But why do we not care about anything prior that's up there? Because not only is it at a premium, what I would more so say is it's like Mo said, it's not at a discount, right? So like the BX trender, all the stuff that you guys know, it only matters when we are in a discount. So for those of you who were with us in August and September of 2024, we made a shitload of money off of that. This pop was massive, right? We were loading up inside of that zone, made a lot. Would have gotten hit a bit here, and then we really started focusing, especially if we turn on this BX trender right here, right? So BX flips higher low back here in August and September. We had a massive pump. Okay, now BX, we would have gotten tagged out a bit here. We would have entered again here. Now we're up. What in the hell is that? Oh, there we go. Here. So really, if we were looking at those higher lows in that discounted range, 51%, right? So if we look at this setup now, we know the structure is bullish, and we know that we're breaking out here. Now, the question that Shell asked was, why did I average down on this pullback? The answer is it was pure luck, right? So in the BX fund, the daily BX fund, I ended up buying calls, right? I ended up buying calls because the daily BX closed higher low here on June 24th, okay? If we're looking at the back testing software, which we cannot trust these results entirely, right? This is just a quick rundown of a very brief, like, how would this have performed from a win-loss ratio standpoint, right? And at the end of the day, I don't trust these results with everything because we know that it's going to repaint. But what we want to do is use this, in my opinion, as just very brief, like, what's the average win? So I don't care about this price indicator. Like, I don't care about all of that. If we're looking here, the average win is 22%, right? Just as a very blank slate chart. Like, I'm not using this as like, you know, the gold standard. It's just a 22% move is pretty average with that. So if we look at this trade, this trade was up 24%, right? If we're looking at this as a range, right? Do you think at the time we were trading at a discount, or do you think we were trading at a premium? And once again, this is where, I have to put my educator brain on, and then I have to put my trader brain on. Because if I was trading, I would not have as hard rules as what we have in this community. But because we all have to be on the same page and we all have to be doing the same thing, I have to be a lot more concrete with my decision making. But I want you to think through the lens of like statistics and market psychology. Were we at a discount? Were we at a premium? We're at a premium, exactly. Now, just because we're at a premium doesn't mean I'm going to take the trade off the table, right? Because this could go parabolic and break out. But we were in with options. Those options had nearly doubled. So I want you to think about this starting first, okay? The options have doubled. So now that position, which was a $5,000, a $4,500 position, is now a $10,000 position, right? Because it's moving way faster than shares, which means that like from a risk management standpoint, we are kind of out of whack, right? We're out of whack a bit. Like we have way more in this position than we did just a week ago. And our average win is about 22%, and we're trading at a premium. So what I did was I took some off the table. I can't remember if I took 3 or if I took 6 out, right? So I took some of these profits off the table sheerly because of like statistics, not because of the strategy, not because the market told me to, but just statistics that like, hey, this position has doubled. We have way more capital in this trade than I normally should have because the position has doubled. And so I'm going to take some profits off the table. And yes, Stephane, so I took 20% off. Now, the reason I took 20% off is nothing is telling me to take it off the table, right? Like nothing other than, hey, we're breaking out and you have too much money in this. But nothing is telling me as far as a trigger to get out. So I took it off, right? Price pulls back yesterday or 2 days ago, 10%. Now, I averaged back in not because of anything technical. I want you to understand that. Like, it's not anything technical. It was purely statistical, right? I just, like Tim said, I just put it right back in there. It was there to begin with, but now that it's pulled back a bit, statistically, we've pulled back. We're at a better price. The price of my actual position went down. So that position was worth, when I sold 20%, like $7,500. It went down to being worth $4,500 or like $5,000. So then I put the money back in. Today it pops again. Now the position's worth $10,000 again. So now what am I going to do? I'm going to take some off the table again, right? So in this case, Stephane, like that was purely like luck and statistics, right? So that was nothing mechanical. That was just really me like, dude, I'm so, yeah, that's not me sending you friend requests. No, nobody accept a friend request from me on Discord, please. If you need to tag me, I know I haven't checked Discord yet today, but tag me in the trading view, in the trading floor, or open a support ticket. But yeah, so like that was purely statistical, and you'll notice that I will rarely do that with shares, but I will do it pretty frequently with options, and that's because the position sizing of options is moving so drastically. But I try not to do that too much because 1, I don't want to confuse people. 2, I don't want to miss the parabolic runs, right? Like what we really want here is a parabolic massive run. I don't want to take profits off the table too early because we're not winning frequently. We're winning like 40 to 50% of the time. So I want to make sure that that risk versus reward is staying very high. And it doesn't always work out. I mean, like, let's just use this example right here, right? Like if we would have done that here, price expands, we could have taken some off, we could have averaged in, and then we would have given our profits back. I sold 2 of 10 in CRDO, and now I wish I didn't do that. Yeah, no, I feel you, dude. And that happens sometimes. That's why I try not to exit too early on a lot of these positions, because like, look at this. Like CRDO, like, dude, first of all, this is dude, like Tim, gorgeous trade. like freaking gorgeous. Pulled back, smart money zone, absolute face ripper. IREN is one that we didn't hit. Same damn thing, right? Smart money zone, absolute face ripper. So what we don't want to do is take profits too early. Same thing with Roblox, same thing with Hood, same thing with Coinbase. Now, Coinbase and Hood, I took something like a hot knife through butter, exactly. Now, with Coin and Hood, I took these profits off the table entirely just because there's too many stocks on the watch list. It had nothing to do with the technicals. It was just there's too many stocks, I think, and I need to put money in stocks I think have better, that are trading at a better discount. But Coin is probably going to continue to run. Hood could continue to run, etc. So we don't want to be taking profits off the table too much. What I like to do at this point is if we're trading at this extended zone and we're trading within a premium, then we'll take like 20% off the table. Not a massive amount. This is the wrong structure. Here we go. And I think that, okay, so now talked about market bias, talked about smart money zones, talked about those as areas of interest. Now, the last thing we'll talk about, and then we'll do a quick little Q&A if you guys have any questions, is Fibonacci extensions. So Fibonacci extensions, I don't normally use too much. What I like to do is use the BX trender as my main reason to get out of positions, because on those parabolic runs like Robinhood, if we would have sold here, like we would have literally missed another 48%. So that's why I like to use the BX trender. But if you are somebody who wants to find potential areas to scale out at, what we can use is a Fibonacci extension tool. Okay. Now, I just use the default Fibonacci extensions. What you're going to do is take your Fibonacci retracement. You're going to go from swing low to swing highs. Okay. Then what you're going to do from that point is you're going to take your Fibonacci extension. You're going to go from that swing low up to that. Oh, it's the wrong hotkey. Hang on. You're going to go from that swing low up to that swing high, back down to that swing low. And then your extension levels are going to show you areas that you can scale out at. So what you could do is take 10% of your profits or 20% of your profits at each one of these Fibonacci levels. So we could have taken, 10, 15% off the table here, 10% off the table here, 10% off the table here, 10% off the table here, and then close the rest when the BX turns red. That's something that I used to do a lot back in the day. RBLX, another good example, right? Fibonacci retracement, Fibonacci extension. Could have taken 10%, 10%, 10%, etc. CRDO, same deal. Oops, that's wrong. Swing low, swing high, back down to swing low. And then these would be our extension levels. Tim, my dad said you'll never get a 10 bagger if you always sell when you get a 2 bagger. And that is totally true, Tim. And that's why understanding your strategy at its core is extremely important, right? If we are trading a strategy that has a 70% win rate, like for instance, right? Let's just look at like the 1 hour swing bot. If you're trading a strategy that has a 70% win rate and an average return of like one RVR or something, or like a 0.8 RVR, then you're not looking for a 10 bagger. You're not looking for a massive rally. You're looking for consistent wins. But if you know that you're trading a strategy, right, that trades at a 48 to a 40% win rate, then the way that you make your money is by getting those parabolic moves, which means you have to be diligent enough to hold those parabolic moves. You cannot sell out of them early. Now, the reason that I don't tell students, obviously none of this is financial advice, but one of the reasons, there's one main reason that I close a little bit at equal highs, and there's a reason that I tell students, hey, it's never a bad idea to close a little bit at equal highs. The first reason is you're a winner. And I know that sounds dumb, But for a lot of people, that itch of just taking some off the table feels good, right? I know that might sound dumb. It might sound superficial to some people, but if you've been holding on to, like, let's say CRDO and you're up 76%, you have probably spent the past couple of months like, should I take profit? Should I take profit? Oh my God, am I an idiot if I don't take profit? Like, what the hell should I take profit? So selling even 10 to 20% in your head, it just removes like the risk. It's just like, one, you're a winner. Two, you've taken some profits off the table. So in a worst case scenario, if this shits the bed, you made money, right? And it just takes some of the pressure off, right? Like with Mara, I've already closed like $1,500 in profits on the daily BX fund on this run. So even if the worst case scenario happens and Mara shits the bed back down to 15 and I give back all of the profits that I have made in the past week, I break even. It's not the end of the world, right? So from a psychological standpoint, it makes you a winner, and it just feels like it's not as big of a deal. It's not make or break at all times. Mo, now that we can add BX and market bias to TrendSpider, do we need TradingView? No, you don't need TradingView. Honestly, I like TradingView better from a pure charting perspective than TrendSpider. I like TradingView because I feel that it's just better from a charting perspective, and I like TradingView because TrendSpider Mobile is trash. Like, I'm not even gonna lie to you. Like, TrendSpider Mobile is shit. Um, and that's a big reason why I don't do affiliations and like I'm not an affiliate with these companies, because if I want to tell you that something sucks, I'm going to tell you that something sucks. If I want to tell you that I like it, cool, I'm just going to tell you that I like it. TrendSpider Mobile is shit. The main reason that I use TrendSpider is because of the Discord community. That's how I run all of the webhooks to have these alert you, right? Like, I could do it on TradingView, but it would be terrible. So like if I come into here, you'll see that I have all of my alerts set up in these webhooks, and it's very easy to do. Right? So I think TradingView is just purely better from a charting perspective, and if I was not having these bots fire for you guys, I would be using TradingView. All of 2023 and 2024, I was using TradingView because I was doing all of my trading with the community manually and I wasn't using bots. But it's really up to you. Some people like trading TrendSpider better, but I honestly just kind of like TradingView. Tim, lose 5%, lose 5%, lose 5%, make 250%. Exactly. Right. And that's the thing that you'll kind of notice, like, if you've like, even if you've been trading like the 1 hour, what are the settings for the fib extension? So it's just the default. I can put them up here on the screen for you. But it's 0.786, 1, 1.236, 1.38, 1.68. I can keep that up for you while I ramble a bit. But yeah, I mean, like, that's kind of what you'll notice, especially with the 1 hour BX strategy and a lot of these strategies that have like choppier win rates but massive returns. Like, the account will sit sideways for a couple of weeks or go down for a couple of weeks. Then you'll get one parabolic move that basically, like, the whole portfolio goes up 10, 12%, and then you have a couple of weeks where things sit sideways, maybe pull back a little bit. Then we get these massive parabolic moves, right? That's how it should be. All right, any questions you guys have, go ahead and throw them out. We're going to answer this one from Shell. So Shell says, can we do an example of NCLH, daily market bias, lower low, daily BX? Why did you not close some of it? Oh, man, NCLH hurts, man. So NCLH freaking hurts a lot. So there's a couple of reasons why I didn't close this NCLH setup. So number one, we'll put this volume profile up too. So number one, if we look at this Fibonacci, right, structure didn't break. Now I want you guys to remember this. We did take out that previous low, but why is that not change of character? Price actually came below that low, but why did that not change character? Exactly, Tim. It didn't break on the close. Remember what we said earlier. The word close is the most important thing. So structure is still bullish here, right? Very, very important to understand. We also have this point of control here. Now, if we look at the volume profile, there is like no volume from 20 up to 26. So that means that if we break out, we're getting this at a discount, we're getting this at a breakout, this thing will probably move minimum to $26 to $28. Now, on the daily, this is where I kind of screwed myself. So the main reason that I didn't take some profits on this is because I closed out my call options like an idiot. I'm not going to be too hard on myself because I wanted to reduce risk because I've bought so much in the main fund that I felt I had to reduce some of my risk. But if I had call options still, I 100% would have taken some out. I 100% would have taken it out. Roby, bro, thank you so much, dude. Thank you for being here. I hope you have a good night, man. Really means the world to me. And we'll probably hop off in a little bit, so you shouldn't be missing too much. But yeah, I mean, if I have shares like this, I will normally not take profits. Now, granted, the shares are in the main fund that's going off of the weekly. Looking at the BX fund, I've been holding shares here in the BX fund, and in most cases, I will not take shares off the table. Right? The main reason I don't scale out of shares that much unless it's like a massive run on the weekly is because it doesn't mess with the position sizing that drastically. Right? If we went in with a $10,000 position here, which is what we did, that position now is worth $11,500. That's not crazy, right? If we went in with calls for $5,000 and now they're worth $10,000, that is very big relative to risk, right? So that's why I did not pull any profits off of the top with those lower highs. It's because it's really not going to make that big of a difference. I want to try to stick to the BX as much as I can here. Closed all my calls today. Good move, bro. Good move. But yeah, overall, like, you know, and here's the biggest thing that I want you guys to realize, right? Is like we stick to the strategy to the absolute best that we can, and the strategy is meant to be stuck to, but there is no perfect strategy. Right? There isn't. Like you'll look back some days, like this is an example, and you'll say, oh, what if we just close when the BX makes a lower high? Okay, like that would have done well here, and it would have done well here, but it might not do well here, right? So like the goal and what we're trying to do here is not necessarily perfection. And what we're using the BX trender for is basically to manage our risk, right? Like that's the most important thing, especially when we're looking at getting in and turning the bots on and doing all this stuff within market structure. What we're trying to do is make sure that when we turn our bots on, that we are turning our bots on not in a premium, right? We want to make sure that we're turning them on in a discount, and we want to make sure that we're trading this breakout into it. Now, the issue is like there's no way for us to create an indicator that says only trade at a discount, right? Like there's unfortunately just no way to do that. But I want you to understand that like the bot would not have been on during any of this shit here, right? Because at the end of the day, like we're trading at a premium. The BX is dark red. There's no reason to focus on that. We can focus when it gets back into a discount. I sold early, but screw it, I made money. And that's the whole point, right? Like the one thing I want you guys to understand is that like we're never going to sell at the perfect time, and you don't have to, right? Like if Hood continues to run, I'm not going to look myself in the mirror and be like, you're an idiot, you could have made more money. You know, if coin continues to run, I'm not going to be like, you're an idiot, you could have made more money. I'm just going to say to myself like, all right, whatever. Like I still made a huge return, and if I miss out on another 20, 30%, whatever. But I can take that capital and put it into Zeta, which doesn't have a 20% upside. It has, you know, potentially, if this plays out the way I'm expecting, like 100% upside. So like, and I think too that a lot of this comes down to realizing, and we I don't want to beat a dead horse because we talked about this a lot on Sunday's live stream, but like none of the money that you're trading with today should really matter to you this week or this month. right? Like the goal here is to learn the system, to trade the system, to do this long term, to build your own machine, to build your I don't want you guys to think like traders, right? I want you to think like a fund manager. That's what you're building. You're building a hedge fund for yourself and for your family and for your future, right? You're not building this so that you can take that money out and go buy a Porsche next month. Even though a GTR 911 would be sweet, right? A GTR 3 would be amazing. But like that's not the goal, right? The goal is to treat to whether you're doing this full time or you're working a full time job and have a career in doing this is to build your own freedom and your own fund to really move your family and yourself forward for the rest of your life. That's the goal, right? So you don't have to worry about selling at the perfect time. You're never going to do it consistently. I never do it consistently. But that's why I really like the idea of scaling out, because whenever you get that itch, right? Like I got a buddy and he'll text me, he'll be like, dude, I think I should sell. And I'm like, sell 10%. Just scratch that itch a little bit, bro. Like just 10%. Sell 10%, sell 5%, come back in a couple days. Right? Because then you're at least getting out, you're scaling out, you're taking a little bit off the table. Tim, welcome to the team, brother. And yeah, so Sunday live streams are at 5 p.m. And then every once in a while, we do these weekly live streams on Wednesdays. I want to start doing them again at least every other week. I would really like to live stream every day. But the problem is, like, I work so much and my lifestyle is so crazy that I can't consistently say every single day at 5 p.m. or every single day at 6 p.m. What I might start doing is if like I randomly have an hour or two at a night, I'll just hop on and live stream. Be like, hey boys, girls, we're gonna hop on, talk about market, go over some stuff, you know. Yeah, dude, the our Discord community is a lot. Um, it's a lot. Like it, I understand that. I would definitely say check out the onboarding, check out the SOPs and stuff. At least this beginning section. But it's a lot. You know, one of my goals here in the community is to give you guys obviously the strategy, all the tools, everything that I'm doing. Um, and to really give you guys an idea of what we're focusing on, but then also give you the ability to trade whatever you want to trade. Something that I would personally like to do in the next 6 months or so is really clean the Discord up a lot. Um, I went through, I killed the 15-minute quant bot because like less than 10% of the community uses it. I will keep this thread up. So if you guys want to learn how to set it up on your own, so it'll send you text, you can do that. Um, I might stop trading the 1 hour swing fund at some point, but keep the bots alive maybe in the next 6 to 12 months. But I would like to bring it down. I really would. I think that there's just so much, which is great, but I don't want this to be overwhelming for like new users. It's like really, really important. So I want to give you guys like everything that we possibly can, but I don't want to overwhelm you. The easiest way to think about it and look at it is that main fund weekly watch list, buy and hold, like the longer term strategy. Daily fund, BX hybrid, these are based off the daily chart, and then the 1 hour swing and the 1 hour BX are based off of that. And then the community trade section, like, dude, everybody over here, everyone in this community, like everyone in here, right? Like, I don't know about Dirty Dog Dave. I think he's past couple of months, but like Tiger has been with us for like multiple years. Sean has been with us for multiple years. Akon has been with us for about a year. Proton has been with us for multiple years. Like everyone in this section, Jamie has been with us for multiple years. Like everyone in this community has been trading with me and with our strategy for literally like multiple years. And everyone in that community, they are a lot more, I would say active, right? Like a lot more active than I am, but like they are there to help each other. And like, in my opinion, that aspect is the most important part of this community. And what I think brings the community so much value is that like we are not here to make a quick buck. We're not here to YOLO our portfolios away. Like we all understand the market. We all trade the same relative system. We just have different ways in which we use it. And like that is priceless in my opinion. Like it really is. Let's see. Been following you on X for a while and finally joined you. Thank you so much, Tim. I'm stoked to have you here. Shell, same here. I joined Mara and MSTR on X. Dude, yeah, I'm stoked to have you guys here. And the community is definitely growing. pretty significantly. And we're getting to the point now where like, my goal is always to help people, but I don't want this community to like grow too big. Like I really don't want like 5,000 people in, like I don't want that. I didn't expect my X following to actually get to where it is. Like I thought maybe max I'd have like 20,000 followers or whatever. But it's only getting bigger and bigger, and like I really don't want too many people in here. The quality of the community and the people in it is very, very important to me. And it's something that you can't just like buy, right? Like you have to build it through years and years of doing this. Going back on recent trades as you did with Mara and CLH really helped. No problem. Is SG going to be a sell tomorrow because of the BX? Yeah, so SG is going. I actually need to write that down because that was a manual trade. So yeah, that is actually going to be a sell. So we can talk about this very briefly. So there are mechanical issues when it comes to the BX bot or just bots in general, right? So if we take a look here, you can see that this bot is on. So this bot is on, but it's not in a position. The reason for that is when we added the SG to the weekly watch list, the BX was already green. And so since the BX was already green, it's not going to fire a buy signal. So that's why like there are times where I will take a trade based off of the BX, but it won't be in there. Ryan, can you talk about how to handle bot trades that happen at 4 p.m.? Yeah, so basically the BX fund, it will trigger at 4 p.m. and then I normally enter the next morning. The reason for that is like that is based off of what we should be doing based off the back tester, like entering at the next morning. I like that because then you don't have to worry about having trouble filling with like after hours and stuff. But if you are somebody who wants to trade after hours that night, because let's say you're like a lawyer or something or a doctor or just whatever your job is, and like you can't be at the computer or you can't be at your phone in the morning the next day, then you can do it the night before. Personally, I like doing it the night before, but I don't do that because I need to stick to the system. Once again, there are a lot of things that I would do differently if I was trading without the community. But we need to stick to a system. Tim, yes, there's a search on the list. Yeah, so you can come up to here and you can just search. So you could say like AMD. You can search that there. If anybody is going through the trading material here, you can also just hit Control F and search. So you could say like smart money. You could say volume profile. You can search through there. And then I think you guys can also search on the Discord by hitting Control F. Maybe it's just me because I own the server, and then typing the stock. So like PayPal. And then you can search anything within that thread. And if you do not want sections in the Discord, you can come up here to browse channels, and you can actually just turn off specific channels that like you don't use. So if you don't use the 1 hour bot, then you don't need to do that. You can just come up into search channels. You can type 1 hour, and then you could turn all of these off. Can you do a quick look at FLNC? Yeah, let's take a look. Nope, I'm in the wrong section. Ooh, this is... Okay, so I'll ask you guys this. Is this bullish or bearish market structure? Command F works on Mac. I'll do that's even better. Is this bullish or bearish market structure? This is bearish, yes. And because we did close under that, right? So looking at this and looking at the volume profile, this is looking like we're probably going to bounce up into this smart money zone. Now, I don't trade this, but there are a lot of people who trade the opposite, right? So what we like to do is we like to trade inside of these smart money zones. So like we would be looking to short up in this area. But there are people, right? I think ICT, I don't know what he calls this, but there are people like, I think what he does is he waits till we find a bottom, and then he'll go long, set a stop loss, and then he'll set his take profits up here. and that'll give you like a 10-to-1 RVR or something, like a 6-to-1 RVR. So in this case, personally, this is not something that I would trade, but if I had to make an educated guess, I would say that we are probably going to push up here and then reject. You said you're going to add USO. Do you still feel the same? I do. USO, Chevron is another one. So if we turn on quarterly bias, you'll see Chevron is inside of the quarterly bias. UCO is not inside of the quarterly bias, but we actually have bullish market structure as of recent. I do think like looking at a lot of these stocks, like a lot of these energy stocks, Oxy is another one. They're looking pretty good. The problem is we just have too many stocks on the watch list. So I don't want to add like more than 50, which is a lot. So we'll see, but I might add them. Or if some blows up, you don't get the rip. Yeah, so that's the thing, Tim. So that's the thing that stinks about waiting till the next day to take positions in the BX fund, is that if a stock gaps up overnight, we're paying too much for it. But here's also something that I've noticed, right? Is that if we get a sell alert and then the stock we're supposed to sell gaps up overnight, we actually don't take as big of a loss. Like today, we actually took a profit on net. It should have been a loss. We actually took a profit on snow. It should have been a loss. So sometimes that helps. Sometimes it hurts. My plan this week is to go through and manually backtest and see if we would do better buying or selling after. Mo, Peter, are you planning on doing a meetup? Yes, I plan to do one. Contemplating how I want to do it, and I'm contemplating what I want to do. I'm thinking New York, because I'm like 2 hours away. I think New York would be good. I think Miami would be good. I also don't know what I want to do. It would not be public. It would only be obviously for you guys in the community, but I don't know how I want it to be. I don't know if I want it to be like very loose and just like, hey, let's meet up, let's talk, let's get dinner, let's grab it. I don't really drink, but like, let's grab a drink, let's chill. Let's do like a fucking workout or something. I don't know. I don't know if I want it to be like that, or I don't know if I want it to be more like professional, where we like rent out a hotel, we get blocks, we do workshops, we like I don't know what I want to do. You know, I don't know how many people are going to show up. And the other thing too is I don't want it to be a fart sniffing convention, right? Like there's so many of these trading groups are like, they just meet up and they're like, this is like, I don't want it to be one of those, right? Like I don't want it to be like, I don't know. I've just been to too many of those where like you're just going and you're charging like $4,000. Like I don't want that. I don't even want to charge it. Like I don't want it to be like that. Like I just want to be like me and the boys and then the girls from the community. Like we're chilling, we're hanging out. Like I'm just a normal dude, right? Like I want to be able to talk. I want to be able to put faces to names. I want you guys to be able to ask questions. I just don't know like how professional I want it to be, and I don't know if I want it to be like a meetup or like a workshop or a mix of both, which I think would be probably the coolest. So I have to figure that out, and then I have to figure out logistics, because I don't know how many people are going to show up. If there's like 1,000 people who are going to want to show up, then like we're going to need like some security. Like we're going to need, I don't know. I got to figure that out, because one of my thoughts was like, we'll just rent a massive Airbnb and just be like, all right, whoever's showing up, right? But then like we're gonna have to get we're gonna have to get like security or something. I don't want some crazy people showing up, right? Like if it gets leaked or something. So I'm thinking about doing a mix of both. I'm gonna talk to some of my friends who have done some meetups and stuff and kind of figure out from there what we're gonna do. But like I'm not looking to like sell tickets and like make money. Like maybe if it was a ticket, it would be cheap. But like I'm not trying to make this like I don't know. I just want to keep it as chill as I possibly can, honestly. Like I think that's like the most important thing. I don't want to be like getting up and doing like a keynote in a suit or something like that. Like I don't, I don't, and I also don't want it to be like unprofessional and like people getting hammered and like doing crazy stuff. Like that's not the goal either. But I'm not a flashy person or anything like that. And we can live stream it for the rest of us. That'd be sick. But I want to definitely do that. I want to definitely do that because I think it'd be very good to put names to faces. I think it would be really good to have each other meet each other. I think that would be chill. Yeah, no problem, Payman. Have a good night. I'm going to be hopping off soon anyway. We're coming up on 2 hours. And that is my alarm to stop. Let's see if there's any other questions that I missed. In line with your message earlier today, can you look at Pep? Yeah, let's take a look at Pepsi really quick and then we'll hop off. So Pepsi's kind of the same situation, right? Like Pepsi, oh, this had to reset. There we go. So Pepsi, right? Taking a look at the weekly, taking a look at this bias. This is a quarterly market bias, right? So the monthly market bias has already broken, right? So from here, the next step is that if a monthly market bias breaks, the next area that we're going to go to is going to be a quarterly market bias, right? So the quarterly bias, we're under it. But what do you notice, right? Like if we look at the Fibonacci from the swing low up to the swing high, we have not broken structure and we're actually sitting inside of the smart money zone or inside of the golden pocket. So this looks really good, right? I really like this. Weekly BX is looking very strong. Monthly BX has the chance to close high or low. So I think this is going to be a very, very good candidate for the next couple of months to run, 30, 40, 50%. And if I end up taking a stock off of the weekly watch list, I'm going to be adding that back in. I think panel discussion would be cool too. So there's a lot I want to do. I think the problem is, and this is not me being like, oh, woe is me, or, I'm not complaining, right? It's just like, I work a lot and I feel that every day, if I'm just being honest, like I'm underwater, right? Like I don't have people who like edit my videos. I don't have, like, it's just me. It's like me and my brother and Angel and Kendo, they help out too. But it's like, I don't have an editor. I don't have an admin assistant. Like it's just me doing this, right? Like, and the small team. And like, I think I run it that way for a couple of reasons. One, because I just want this community and everything in it to be an extension of me. And I think number two, that like a lot of the videos that I make and a lot of the content that I make is all based off of like what's happening today. So I can't make a video on Tesla and then send it off to an editor to edit and put it out in 3 or 4 days. Like that doesn't make sense. The information is legitimately useless after that. So I'm working like most of the day, like usually 10, 12 hours a day, and I'm not even like necessarily trading that entire time. So like the idea of me even taking a day off, like I haven't taken a day off in like fucking years, right? So, and I'm not saying that like, oh, poor me, but it's just like I don't even know how I would plan this and what I would do. And that's why long term, one of my goals is to try to work less and try to focus on less, but just doing it as high quality and high caliber as I possibly can, which is, like I said, why I will personally probably stop trading the 1 hour swing fund in a couple of months. Not because it doesn't work and not because I'm not making money, but it's just not worth it for me right now to be doing that for the next 5-6 years, to check the market every hour, right? Like I need to focus on, and the way that I look at it too is like my job for you guys is to continue to push this strategy in this community further. And I can't do that if I'm got my head in the weeds 12 hours a day. You know what I mean? And you're not going to get the best of me doing that either. Work less, play more golf. That's what I need to do. Yeah, I need to get into playing golf too. Delegate whatever you can. Only one life, one body. Totally agree. Rex, bro, get a committee of willing to plan it. You get an editorial final say, give them a deadline and maybe an outcome of your expectations. That's a really, really good idea too. One of my plans this year too is, my girlfriend, we've been together for like, she'll be my wife at some point, but we've been together for like 7 years. And she works in corporate finance. She's an EA for a CEO of a really, really, really big investment company in the city. And so she's going to be leaving her job in December, and she's going to be coming on to help me with the company and basically like give me structure for everything that I'm doing and manage a team if I end up hiring one and doing all that. So I think that by the end of the year, that'll really help. All right, let's talk about TTD, and then we're going to hop out of here. Tim, have a good night, brother. Thank you for being here, and thank you for being in the community. All righty. So TTD, this is looking sweet, right? We probably should have added this to the list, but I was not paying attention. But this looks really good. Smart money zone, price pulled back in. Weekly BX flipped higher low here on April 14th. This looks juicy. Yeah, this looks like, we could have already been up about 38%, but looking like we're going to move up to about 100, maybe 120, $130. Looks really good. Mo, have a good night. All right, guys and girls, I'm going to get out of here. Thank you so much for your time. Your energy really means a lot to me. I know you could be doing anything tonight, on this Wednesday. So thank you for being here. Thanks for participating. If you want to rewatch this, I'm going to be taking the link and putting it in the market structure section of the Discord. My plan and my goal for the next couple of weeks and next couple of months is going to be continuing to work on the strategy, but really focusing heavily on making the community and everything that we do here just easier and more seamless. As I said, my goal is to try to work less day to day, but work more efficiently and on things that are further pushing for the community. The best way that I try to explain it with myself is that, like, I have to switch from trader to business owner and community leader. Right? I'm still operating as just a trader, waking up, doing my thing, doing everything myself, doing all the charts, doing everything, myself. And I have to kind of switch into, like, I don't want to say like CEO mode, but like leader mode. Like, what is the most important thing that I need to possibly be doing? I think it's important. If you want a sounding board, former exec, organizational strategy planning, I'm happy to help. Rex, dude, thank you so much, brother. And I'll definitely take you up on that. But that's why I'm trying to focus heavily now on, like, building out these SOPs for you guys, making sure that what we're doing is, everything that we have is possibly here, trying to focus on making things. I think the problem is there's just too much. Like, I think that if there's anything in the community, is like there's too many alerts, there's too much stuff. But the problem is I don't want to be taking things away, Ophi, that was excellent. Thank you so much. It means a lot, guys. All right, have a good night, and I will see you all tomorrow. Peace.